You know, as you know, I'm usually the first person to make a call on a long-term trend change, usually months, if not years, before anybody else notices it. And I'm going to make a call on the dollar right now. I'm going to say that we put in a uh, cyclical bull market top back here in December. So, you know, in December of 2015, I made the bear market bottom call in gold, long before anybody else was willing to see that. When stocks were moving down into their 7-year cycle low, everybody else thought a bear market had started. You know, I was one of the few people that uh, was warning that that was not the start of a bear market, and we are not even close to starting a bear market in stocks yet. We still have a bubble phase ahead of us. I made a call on a final bottom in the CRB in early 2016 when people were expecting oil to go below $20. So um, I'm going to call it right now. The euro is not collapsing. It's not going to come to an end. On the contrary, the euro is going to be going up. And the dollar is going to be going down. These bull and bear market trends tend to last between 7 and 9 years. The current bull market was almost 9 years long. So, you can see that the dollar has been in a secular bear market for decades. That hasn't changed. We haven't started, a new secular bull market. As soon as the dollar became the world reserve currency, that just allowed politicians free access to a counterfeiting machine, and human nature is never going to change. So there is no scenario where that the dollar is ever going to enter a secular long-term bull market. It can have cyclical bull markets, but politicians are not going to change, and the dollar is going to be in a secular bear market until it finally just becomes worthless. So there is no scenario in which the dollar was ever going to rally and make new highs and turn this into a long-term secular bull market. This was always just a cyclical bull market within a long-term secular bear market. So I'm going to be the first person, as usual, to make the call. The dollar put in a cyclical bull market top right here. Now let me shorten the chart and show you what I'm looking at. Okay, so here are the 3-year cycle lows. The multi-year cycle in the dollar is a 3-year cycle. We had one in 08. We had another one almost exactly 3 years later in 2011. One could kind of make the case for a shallow 3-year cycle low here in 2014. And my feeling is that the dollar was moving down into a 3-year cycle low right now, but it just doesn't look like it's going to drop deep enough to give me the sentiment readings that I want to see from a 3-year cycle low right here. So I've looked at this a little more in depth, and I think probably what is going on is that we got an early 3-year cycle low right here in 2016 when the dollar briefly dropped below this intermediate cycle low. We had a double top forming right here. So I think what's happened, and I've noted before, many markets top like this, is we've got a failed breakout on the dollar. So I think this was an early 3-year cycle low. On that election night reversal, the dollar popped back up above this this double top, but it has not been able to hold that breakout, which it should have. This was a long consolidation, 2 years, a 2-year consolidation. A breakout should hold and run, and it didn't. So this is very often how major multi-year trends reverse. They'll do it with a false breakout or a false breakdown, and I think what we've got here is a false breakout on the election night reversal. The world assumed that was bullish for the dollar. And in fact, it is not. The 8-9 years of QE are finally going to come back to bite us in the ass. And I think what we have here is a left translated 3-year cycle in progress. So I expect we're going to get a nice little bounce here. Maybe we come right back up and test this 100 to 101 level. But then I think we're gonna start back down, and I think we've started a cyclical bear market in the dollar that will last. Well, they tend to last about 7 to 8 years. So I'm going to make the call right now, long before anybody else makes it. The euro is not collapsing. It's not going away. In fact, it is the dollar that is putting in a bull market top, and the dollar that is going to be moving down for the next 7 years. And here is a very good confirmation of that. When the dollar was making a higher high back in December, gold was already sniffing out that top in the dollar, and it did not make a lower low. I'm correct on this. This was a final bear market bottom right here, and gold confirmed it right here in 2016 when it failed to make a lower low, even as the dollar was making a higher high. Gold already knew that that was a cyclical bull market top in the dollar. So while I do expect, another move down in gold here over the next month and a half, it's not going to break this 2016 low. And then probably by the end of the year or the beginning of next year, then everyone else will already will start to recognize what I've already noticed, is that the dollar has started a cyclical another cyclical bear market, and gold will, after we finish the correction, then gold will start the next leg up, and it will make a higher high here above the 2016 high and confirm that we are in a bull market and the dollar is in a cyclical bear market.